Luskin, I don't know if this was a market impact or not, but George Bush wants an early vote on Colombia free trade. It's been a test vote for our ally in Latin America. It's also a test vote on the entire free trade issue. Today, House Democrats, Nancy Pelosi and so forth, said no vote. They're shelving the vote. And then we learn, while Mark Penn was busted in the Hillary campaign for working on Colombia free trade, today we learned Bill Clinton got $800,000 from Colombian development people to promote free trade. So, Don Luskin, I ask you, why isn't Bill Clinton being fired? Why isn't he being shown the door? I mean, he's got better trade policy than his wife.
I guarantee you that as soon as it's absolutely official and the ink is dry on Hillary's not being the Democratic presidential candidate, Bill Clinton will be out the door. They will be divorced so fast it'll make your head spin. But what Nancy Pelosi did is, she had to do it. Both of the Democratic contenders are going out there trying to outdo each other to be protectionist and anti-free trade. So they've got to have the Speaker of the House backing them up. And what better way to do it, instead of actually having a vote and voting no, just saying let's not even have a vote. That way they get to not embarrass their candidates, but also not go on record doing just about the stupidest thing for the economy that you can imagine.
Well, Luskin, you've changed your view. It's really fascinating, and we mentioned you on the program last evening because it's very exciting. I might add, by the way, we saw a newsletter writer, famous newsletter writer, Richard Russell. He is now forecasting an epic bull market. That was a headline on the Dow Jones Market Watch today.
Wow.
Very, very interesting. Russell, an old-timer with a great long-run track record, is forecasting an epic bull market, Richard Russell. Now, you are forecasting an epic something recovery here because you have decided that the dollar has bottomed and that the gold and oil and commodity boom has peaked, although today does not bear you out. Why do you say that? I don't think the dollar bottoms until the United States Treasury and Fed do something about it.
Well, the Treasury hasn't been responsible for the decline of the dollar, so I don't see why some utterance from Henry Paulson is going to fix it. He and his two Keystone Cops predecessors have been saying strong dollar, strong dollar, strong dollar ever since Bush has been in the White House, and the dollar's been declining. It's the Fed that's doing it. I think Joe Livornia has it basically right, that we've got a financial crisis on our hands, and the Fed, until recently, has been running the printing presses to get us out of it. It's been creating an overabundance of dollars. That's what got us into the credit crisis, and they're trying to do it even bigger to get us out of the credit crisis. Only recently have they figured out better tools. My call that the dollar has bottomed is because the Fed has come up with better tools that put liquidity on Wall Street where it's needed without a lot of excess money creation.
But they're going to keep lowering.
Now,
I've got a Fed Funds futures chart that's going to show the market is discounting 2 more rate cuts, Don.
I know, but before the Bear Stearns bailout and before the March 18th FOMC meeting, the market was forecasting 3.5. So why should the dollar be lower today when we actually have less rate cut expectations than it was when we had more rate cut expectations? And I think those rate cut expectations are just going to come in and come in and come in. You saw the story in the Wall Street Journal today about the Fed trying to figure out what it's going to do if it runs out of T-bills. Anyone who reads that and figures that's a way of revving the printing press and creating all kinds of money and inflation isn't reading it right. The reason why the Fed might run out of T-bills is that they need to sell T-bills to mop up the money creation that would otherwise arise from their new liquidity
facilities. Which is what
it's because they're trying to sterilize their new operation.
Right. I mean, Larry, Don and I have debated a lot in the past and haven't found a lot of common ground, but I want to just reinforce what he's saying. The fact that the Fed's balance sheet has barely grown is a testament to the fact that they're sterilizing a lot of these operations, and that's one of the reasons I don't think you can look at dollar weakness necessarily as being Fed-driven.
One is the liquidity, one is the supply of dollars, and I suspect you're right. I've looked at the same data. The balance sheet is not growing, nor is the accumulated monetary base. But the other is the price of money. They keep dropping the price of money, and the risk is globally the demand for it will go down. And I still think, I like Don's story, Don. It's just that I'm not confident that this story can hold because I don't see any backing from the Fed or the Treasury.
Larry, let me be very clear about what my story is. I'm not looking for some kind of dramatic recovery in the dollar. I just think it's going to stop going down because I think the lead weights that were dragging it down have been taken off. Now, we're going to have to do something good to get it to go back up. Yes, so I'm not like a dollar bull here. I've just stopped being a dollar bear.
All right, fair enough. No,
and Larry, all the dollars.
I want to get to my pal, Don Luskin. Now, I love this Richard Russell epic bull call, and reading your latest missive, I see at least a mini epic bull call, and I want you to tell us how to invest in this epic bull. I mean, Don, actually, what are you're talking about a rebound for the whole market here? Is this the end of the bear market that started, last October, that sort of thing, and you want to go through new record highs? How do you see it, Don?
I think we creep up to new record highs. I don't see anything particularly epic about it because the decline wasn't epic. I don't think it deserves the name bear market. As we stand now, in total return terms, we're only about 11.5%, 12% off all-time highs. That's nothing. In a real bear market, you lose 25, 35%. You know, this is nothing. Yeah, but we're in the safety net, bail-me-out world where you lose 12% and everybody decides it's the end of the world. So we didn't have an epic decline. We're not going to have an epic recovery, but the bull market is intact. I think we're going to make new highs. And hats off to Richard Russell, who was an old-timer when I was starting in this business 30 years ago. So he's really an old-timer now, but he's a great one.
I don't know.
And Don wouldn't accept a few shows ago that even the debt in the residential housing market is 11 trillion.
I'll tell you what.
He forgets.
I'll tell you what.